Hello traders, my name is Logan with Funding Talent, and in today's video, we're going to be going over the market forecast for the week of May 31st. In this video, we're going to highlight the best fundamental drivers to stay away from, as this week is NFP week, and also the best technical setups that we are currently eyeing up, as we always do. So without any further delay, let's get right into the video. Hello traders, so here we are on the PowerPoint as we always are. So as always, let's dive right into the fundamental drivers of this upcoming week. So we know that this week, the start of this week, is May 31st, and the upcoming week is going to be the first week of June. So, question of the day, what does that mean? Okay, if you haven't already answered, that means that this week is NFP week. I hope that we start to get in the habit of this. So, the first week of every month is always going to be NFP. NFP is on the Friday of the first week of every single month. So, this week, we have news on Tuesday, 12 a.m. EST, and that is going to be some Australian dollar news, and then we have OPEC meetings the entire day on Tuesday. So be a little bit careful, because we also have some news on the USD, the pound, and the Australian dollar. The USD and the GBP news is at 10 and 11 a.m., and then the Australian dollar news is at 9:30. So a lot of Australian dollar news, a lot of news overall on Tuesday. So just be careful, tighten up your stop losses, and lower your lot size a little bit so you are mitigating your risk in these days where there's going to be more volatility entering the market and possibly shifting prices away from your favor and away from your bias, right? So besides that, Thursday, just some USD news at 11 a.m., and then Friday, NFP. So the main days you got to be careful for is Tuesday and Friday of this upcoming week. So personal income in the U.S. decreased 13.1% month over month in this month of April, this last month. So this was compared to a market expectation of a 14.1% drop. So personal income did drop, but not as much as people thought it would, which is good news for the economy because, as we know, more income, more spending on goods and services, commercial goods and services, which then flows back into the economy, pushing the economy higher. So, besides that, core PCE prices in the U.S., which, by the way, does stand for Core Personal Consumption Expenditure, increased 3.1% year over year in April of 2021, which is following an upwardly revised 1.9% gain in March. It is the highest rate in PCE prices since the 1990s, which is pretty incredible. The core PCE measures the change in the prices of goods and services purchased by consumers for the purpose of consumption, but this does exclude food and energy, so it's all of the money people are spending for the purpose of consumption. So with this good news, we're going to keep going on with our risk on market sentiment. I told you guys 2 weeks ago that if bad news arises, we're going to switch, but no bad news has really propped up yet. So we're going to keep on looking at a risk on market sentiment. For people that are new to this series, a risk on market sentiment means expectations are higher for further economic growth. People are more willing to invest their money into riskier assets in favor of a higher return. And that means for our currency traders that we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the Great British pound to appreciate and move higher. So let's move into the charts for our technical setups of this week. So to start off, we're looking back at the DXY. As we know, we were looking at the DXY coming lower, which it still has, and on this last 4-hour candle today, which is Friday, we're recording this, there was a very, very large rejection to the upside from this level of 90.4. So from here, I'm definitely expecting prices to continue moving lower as we have been expecting, and this just is going to confirm my bias in terms of candlestick analysis. When you have a large wick like this that rejects a price level and then a move lower, which it looks like we're getting, in the next hour, 45 minutes, that is really good for our bearish momentum and bearish bias, because that shows that buyers tried to push higher, but sellers did not allow them to. They pushed up higher in this wick, sellers said no, pushed price lower, and then are continuing to push price lower. The momentum is strong on the bearish side, so we're going to keep looking at short trades on the DXY. So gold, we know that we're going to look at this every single week until this hits take profit, but this is going to probably be one of the best trades that I called out for you guys so far on this series, because we started right here, and the risk reward on this trade was spectacular. I called out this entry right here. Both entries were at 1684, and there was one entry here, and there was one entry right here. The risk reward on this trade was right below the reversal zone, below this wick, because this was the 61.8 reversal, and if anything went below there, it would have invalidated the trade entirely. So far, we're looking at a 14.1% return on risk, and if you multiply that by two positions, that is a 28 return on risk so far in this trade, and this trade is not over yet. So as we were talking about last week, we can expect this to pull back a little bit because we are pretty extended on this wave right here, this impulse wave that we're in right now. So we can expect a corrective wave to form soon, but I'm not going to be just closing my position, essentially. What I'm going to be doing is moving my stop loss, trailing this trade in profit, and going to maximize our profit on this trade. So be careful. Don't be afraid if we get a correction, because prices will continue higher. So this was a head and shoulders that I marked out for you guys last week, and I showed you this wave count, which I'm going to delete just to make things clearer. This head and shoulders did activate. We came down and got a retest of this neckline and then another push higher. The thing is, this week, I actually executed 3 profitable trades on this pair. So if you caught this, I really hope you guys did. There was a lot of great opportunities to make money on USD CAD. It made my week by far, and I hope you guys can capitalize on this too, but the main move is not over yet, so if you've not gotten in yet, there's still an opportunity to do so. We are still maintaining our bullish bias on USD CAD. So this was USD JPY. As we saw, we were looking at this symmetrical, or not really a symmetrical triangle, but a wedge rather, forming at this level. And we said once we get a daily close and break below this channel, it would be a short signal. We never got that, and we actually got a break above this resistance line that we have right here. Pretty strong, pushing us to the middle point of this channel, so I'm going to be interested in what happens in the next couple of days. As long as we do not break this high right here of 110.97, then once we get the break of this channel, it will still be a short entry. So I'm going to keep my eye on this, and my bias is still going to be bullish once we get a break of this level on USD JPY. Pound dollar has been chopping around. We're still looking at a bearish move on this pair once we get a break and confirmation of this support line. So here's NZD-JPY. As you know, we were looking at a short opportunity on this last week, which was invalidated, but this presented us with a very good opportunity to get in on a long position. So what I'm going to be looking for is a confirmation of this resistance, turn support, and then a push higher from there. My bias is going to be short-term bearish and then long-term bullish on NZD-JPY. So traders, that was the market forecast for the week of May 31st. I hope you guys took some value out of this video with the technical setups that we're currently keeping an eye on and looking to move on, and also the best fundamental drivers so you are aware and can stay away from them in this upcoming week. If you are not already following us on all of our social media platforms, be sure to do so, because we're releasing new content every single day across all of our different platforms. And be sure to subscribe here, because we're releasing new content just like this all the time on our YouTube channel. So, as always, on behalf from everyone at Funding Talent, happy trading.